IIFL Finance has announced NCD issue and it is largest ever for them. To discuss about it, I have with me Mr. Nirmal Jain. Mr. Jain, welcome to ET Now. My first question to you is about the timing. I remember the last commentary you gave in which you mentioned about the cost of funds going downward trajectory. Now, as far as the interest rate, the coupon rate is concerned, it is quite, I would say, competitive in the market. So what is the idea coming at this time, and talk about the funds?
Thank you. No, thanks. I think that's a good question. So right now, our strategy is to bring the cost of funds down, and NCD issuances with all-inclusive cost, with the can be slightly higher. But our strategy is, so there are 3-4 parts of this in terms of strategic element that we are looking at. One is business is growing.
Right.
And we need capital, we need liquidity. And we also need to keep liquidity buffer as a cushion for our long-term strategy. Second, we want to diversify sources of funding. So I think regulators, government, they also have been nudging NBFCs that diversify and don't be over-dependent on bank as a source of money or source of funding. So in that perspective, we had also raised dollar bonds and ECBs we are planning to raise. And if you really look at it, that this is a 500 crore issue with green issue can be up to 2,000 crores. In our overall borrowing, this will not be even 5%, much lesser than 5%. So on the weighted average basis, this slight few basis point cost will not make much of an impact. But one, we need to diversify, and also we have a very strong retail franchise, as you know, because 98% of our book, the loan book, is retail, and many of these customers also invest in the bonds. So we can cross-sell this through our branches. Also, our group company, IIFL Capital and 5paisa, they also have a strong retail franchise.
Right.
So many times, we really have to look at sources of money and the provider of capital from a long-term perspective, and have at regular interval these issuances, so that there is some sort of, when people expect, there's a predictability also to this.
Right. And what would be the usage of proceed of the funds?
So the funds will be used primarily for working capital, that is for growth of business, to fund the loan book growth that we are having. So we are seeing a very strong growth in a loan portfolio. Gold loan has been growing very well, primarily because the gold prices have been firm, but also because there has been a slowdown in the funding of unsecured lending by fintechs, by other NBFCs, and the demand also has picked up with the economy doing well. As you see that the macro economy has started doing much better. With this tariff thing getting sorted out, we'll see that MSME, particularly in sectors like textiles or jewelry and swims and footwear, dependent on those, and there are tens of thousands of them. And they also have a cascading impact on other industries, services as well.
Right.
So we'll see a pickup in demand there as well.
You mentioned about gold loans, and now that has been the talk of the town in last 1 month particularly. You see the flows, it is coming in ETF via there. You mentioned about the growth which is already there. What is the expectation now for the company in coming months and quarters, because the prices has been quite volatile in last few days?
So gold price is volatile because they are very high altitude. We know that they have risen very sharply in the last few years, and most experts believe that there are fundamental and structural reasons for the gold prices to remain firm. But even then, they'll be volatile. So what we need to be very careful about is making sure that we are conservative in our lending. So our loan to value we try to keep far below the regulatory requirement, which is 75%, but our average loan to value on the book will be around 60-61%. And also we encourage customers to do monthly payment of interest, so that it doesn't compound and the MTV or MTM hit won't. So even if there's a say fall in prices, so on the 75% actually you have a 33% cushion of the price correction. Also, when you value the gold jewelry, you value based on the pure gold content, but the price the customer would have paid or the value to the customer is significantly higher. So if you really look at this industry in the last 15 years, the losses have been minimal. And now this is a secure form of lending, which in a way is good, given that the credit culture has been tested in the last 2 years. The regulatory and also the self-regulatory bodies, guidelines and guardrails have created if you see microfinance industry, then the number of customers has shrunk by more than 1 crore. It's
Right.
a huge number. In the same time period of last year, probably they would have gone up by these numbers, given the way economy is growing. So this gap has to be filled. And we are happy that even government and the RBI is supporting that. They are trying to have a pragmatic regulations, not just to clamp down, but more of a risk-based, which will contain the risk without curtailing or constraining the growth.
In your vision for the group, overall, I want to ask you, which will be levers of growth from here? You mentioned about the gold loans part, which we have just discussed, but which are the other areas you see that growth will be there?
So I think there are two strong pillars of growth going forward as our strategy is evolving, and gold and mortgages. And both are secured and have a very good track record in terms of recovery. And these collaterals don't depreciate, overnight or in a short time period, because if you talk about other vehicles, machinery, equipment, then they depreciate very quickly, because if you repurchase them, then you may not realize the full value. Within mortgages, it can be home loan or loan against property. So these are the primary movers of our growth. And then these customers can be cross-sold the business loan unsecured. And then we have a small piece which is microfinance, which again will depend on the industry. But our strategy has been to reach out to customers that are unbanked, underbanked, the bottom of the pyramid, those economically weaker sections. They account for almost 86% of our loan book. So these customers we reach out through our branch networks of 4,500 branches, and also technology. So we'll cater to these customers. They will remain our strong drivers of growth. But in terms of predominant part of our loan book will be collateralized by either gold or mortgages.
Right. Talking about the whole group structure for IIFL Finance particularly, are we expecting IPO this year?
No, I don't think the IPO, because we are already listed. So
no, I'm saying about Samasta Finance or IIFL Home Finance. Is there a possibility?
No, Samasta and IIFL Home Finance both are very well capitalized.
Right.
So I don't think we should do IPO there.
Okay. So is there a possibility of restructuring or going for some of the investors which can put in stake like it happened in the past?
Yeah, so that we can discuss at the board level. I think there's an option available to demerge these entities or restructure in that manner, so that at least particularly housing finance can get listed separately. They've got RDI as an investor. So that can happen at some appropriate time.
As we were discussing about IIFL Finance, in terms of, I would say that regulatory scrutiny, when the results came, you had clarified that it was more of a procedural issue. I want to understand from here till now, is there any change, or investors can be rest assured that the process is on and the company is on growth path?
I think any large company will always have certain notices, inquiries, which we respond to, and we cooperate with all the regulatory and tax authorities. And we have clarified, we have been very transparent. So anything has been there, we have given all the data, documents, which are obviously subject to public scrutiny and scrutiny by those tax authorities and all regulatory bodies as well. So I don't think investors have anything to worry about. And rating agencies also monitor us very, very closely. And we have been AA stable by CRISIL, and the rating has been maintained throughout even the COVID period or the later crisis. Not only that, very recently, both international rating agencies have upgraded the rating outlook from stable to positive.
Right.
So I think that should be a very strong reassurance for investors. And as I said that investors in a volatile market, when the stock market is volatile, the rate environment is volatile, should look at allocating part of their assets to fixed return, and their 9% yield with a AA stable and secured bonds is a very good investment product. And then they can choose 2-year, 3-year, 5-year, or monthly, quarterly, or annual, or compounding interest options. So all flexibilities are there in the product.
One last question before I let you go. If you compare with peers, I would say, let's talk about Bajaj Finance or others. There is trading almost double P multiple than you. I want to understand from you, do you have that kind of growth path in mind, or do you think investors are not valuing the way they should?
So Bajaj Finance is valuing much more than double maybe. I mean, I don't know the exact valuation. Bajaj Finance has done exceptionally good job in the way they built the business over the last 20 years.
Right.
Obviously, they had an advantage of the parentage. So their rating and the interest cost of fund is much lower than ours, and they use that with a very exemplary leadership. So absolutely, there's no questions about it. But again, this NBFC space is a market where everybody can have a different strategy. It's not a market where winner takes it all. And everybody has a growth path and a growth trajectory and a different size. And investors basically value different companies in different way. As far as IIFL Finance is concerned, I think the growth trajectory is very strong. Our strategy is a little different. Bajaj has multiple products. And there are different, the strengths and weaknesses every company has. So they capitalize on theirs and we are working on ours.
All right. Thank you so much for talking to us and taking
Thank
out
you so
time.
much.